Hi everyone, good day. Once again, welcome back to my channel. So, tonight I'm going to give you a breakdown of what has been transpiring on Volatility 75. Um, I want to use this opportunity to give a big shout out to my mentor, Michael, aka ICT, for all the good works that he's been doing, and I really appreciate his work that he's done over the years. It has really been of tremendous help to some of us. All right, so without wasting much time, I want us to jump quickly into tonight's video, and we do a little bit of breakdown into Volatility 75, and we see what is transpiring on the market, and we see what possible entries you can have, and what we expect in the coming days of the week. All right, so quickly we are on the monthly time frame, and we are looking at Volatility 75 right in here. What we've been seeing is from this high all the way to this low, we've had a series of the market trend from this high to this low, all the way down to this low, down to this other low in here. We have had a bearish movement right in here. All right, and currently what are we seeing happening on the chart? On the monthly time frame, we could see there's some level of should I say consolidation right in here. Change the color of this. We could see some level of consolidation happening right inside of this area. Okay, so that's what I've indicated with the green. All right, so we could see some level of consolidation happening right in here. All right, on the monthly, you know um, there have been some form of inside the bars on the monthly, some form of hammer showing down there and all that. But let's go down to the weekly. I've always made mention that anytime you're confused, or your chart is shrouded with a lot of information that is not making your analysis so clear, what you have to do is that try go to a higher time frame and get a very good picture and get a very clear um, analysis on what is transpiring on the weekly. Okay, when we look at on the chart, when we look at the monthly, currently I can ask that, can you predict on what may easily transpire on the market? I bet you it's going to be a bit of a difficult decision to take looking at the monthly and what is happening currently. Well, you may conclude that, well, we've seen a hammer formed in here, so you are expecting price to rally higher, but that's a difficult decision to take, just basing it on um, a candle pattern that has formed, or a candle that just formed, indicating that it's some form of candle style, so you need to follow that judgment. I don't think it works that easily. All right, and some of you may say, well, the market was trending downwards, so let's follow the trend, and then find a trade. As market is consolidating in here, let's find a trade and continue riding downwards. So what will be the premise? What will be your analogy for saying that, okay, well, I need to continue from where the market has currently gotten to and then trade downwards? I don't think you just want to base your decisions on that alone. Now let's go down to the weekly time frame, as I mentioned earlier. So looking at the weekly time frame, what can you see? Although on the monthly time frame we saw the market descended from a certain high, okay, and it got to this low, and then we saw the reversal a little bit upwards to this side, and we see this candle sort of we don't know what market is doing in here. Either it's consolidating or whatever is doing in here, we can't tell. So on the weekly time frame, you can see a clear cut pattern of a bearish market structure happening right in here. Market moves from this high to this low, and then it comes to form another swing high in here, which is a lower high, and then it forms um, another low right in here, which is much lower than the previous low, giving us a lower low. Okay, which tells you that we are perfectly in a bearish market structure. And then depending on how the candle closes in here for this week, if it closes below and doesn't close up, it doesn't close above this, then we have a beautiful swing right in here. Yet the market hasn't closed, so we can't conclude on that and say, well, the market is going to close below this wherever it is now. No, that can be a premise for this decision. You know, it can go either way. All right, so beautifully, I wouldn't want to conclude on this and say that well, the market is going to go up, and then what else? From this chart that is showing right in here, you can clearly see that we are in a bearish market structure on the weekly time frame, as well as on the monthly time frame. Although on the monthly time frame we've had some form of consolidation happening right at the last four candles that has formed, we could see that the market has more of formed a consolidation right in here. So if you are going to take that same picture down into the weekly time frame, we can equally have that happening on the weekly. We can equally have that happening on the weekly time frame. So you could see how, although this is more of a bearish market structure, but then it is still seen inside a certain area. Okay, it's still seen inside a certain area on the monthly time frame. Now, as we've seen this, what are the probable or the easiest to identify pool of liquidity that we can identify looking at this chart? This is volatility 75. For your information, this is volatility 75. Okay, for those of you who are interested in trading the synthetic indices, this is volatility 75. And I believe that the analysis we are doing here should be able to you should be able to apply the same knowledge to the other asset pairs on the synthetic indices. So you can look at volatility 100, volatility 25, volatility 50, and all that. You know, this same analysis can be applied to all other charts. Okay, this analysis we are doing here, if you're going to follow closely, it can be applied to all other charts. So whilst we are on the weekly time frame, one of the easiest thing that I'm asking you to do is that where can you easily spot liquidity? Okay, where can you easily spot the easiest liquidity that the market will likely or can likely go and grab? Now, let me just draw your attention to this relative equal highs happening right in here. Number one, there are relative equal highs right in here. What other possible liquidity pool can we spot? There is what we call the trend line phantom. Okay, what we call the trend line phantom. So you could see that we have a high in here, we have another high in here, we have another high in here, we have another high in here, another kind of high, and this high is actually coupled with relative equal highs from this high and then this high. Okay, so beautifully, this is what you can spot. And anytime we have this form of trend line phantom, what we call it is that it's an engineered liquidity. Okay, it's an engineered liquidity. That is how come I started on the monthly time frame. Although on the weekly time frame you are seeing this bearish structure, but ultimately the monthly time frame supersedes everything that happens on the market or that you are seeing on the weekly time frame. Okay, so now watch this. This market structure started from this high, and then where is the nearest high that a low that it formed? So let me try and identify it for you to see that you don't just need to be identifying highs and lows anyhow, but when there is a major swing high, and then where's the nearest one? So the nearest low that has probably a very nice high formed after it. Okay, we have this this is a low, it is a swing low, but mind you, the high in here, okay, the high in here, you can see that on the left top corner, the high in here, and then the high in here. This bullish candle high is higher than this, so we don't have a swing high formed. So this low is an intermediate low, so it is not a major low. Okay, so I'm not pointing it to the low right in there. Okay, so this is an intermediate low, so it is not a major low. All right, it's not a major low. So the major low that probably would be formed, let me go back to the weekly time frame. The major low that probably will be formed will be regarded as this low, and it is not yet completed. The low is not yet completed, so we don't conclude, because the monthly time frame or the monthly candle that has to give us a telltale or a clear picture that this is a low hasn't yet concluded or hasn't yet closed. Until this month's candle closes and we see that this is a low, then we know that a low has been formed, so we regard this as our low. And it will not conclude the fact that this is a low until we have a swing high formed somewhere after this low. Then we regard this as our ultimate low. So currently after the market traded to this high, okay, let me close this. Market traded to this high, okay, we haven't really gotten any low. We haven't settled for any low right in here. If you look at the chart well, consecutively, all the candles that has formed right in here after this high had lower their highs that are formed are more of lower highs, lower highs, lower highs, lower highs, all the way to this point, until the next or this month's candle that hasn't closed, that has formed a high that is above the high of the previous month's candle. So that is the last candle that has been formed. This candle, it has a high that is higher than the previous month's candle. So probably there will be a likely turnaround here, but the month hasn't concluded, so you can't draw judgment. You can't draw judgment here. Okay, now beautifully, what does it mean if we haven't still settled on a low? What it means is that if we consider, if this candle is supposed to give us a low, so for instance, let me use this trend line phantom bar and then use it to indicate the low for you. If this settle as a low, okay, if we settle here as a low, what will happen is that now price can move anywhere up but may not have to close above this high. If it closes above this high, we know that there's a shift in market structure. Price can move anywhere within this area, before it reverses back. Or price can just sweep the buy side liquidity resting above this relative equal highs in here. You could see this high and then this high. Price can just sweep the relative equal highs within above this and then continue to rally down. I hope you get what I'm trying to get across here. So now we are using this low as our current low. Now back to the weekly time frame. So just as I said, if we are considering this low as our low, then we want to see market form this swing high somewhere in here, or it can be above this. If the monthly time frame closes and doesn't close below this low and closes somewhere above this, or wherever it is that is not below this low, then we know that a very nice swing has been formed, to indicate that, well, it is probable that we have this as a swing low. And if we have a turnaround somewhere in here, we have a swing high somewhere in here, then we know that we have a turnaround. I hope you are getting the whole picture. Now, the reason why I asked you to identify the nearest pool of liquidity or liquidity pool is because of the fact that on the monthly, price can still retrace to the upside, because on the monthly this is the major swing from this high all the way down to this. Let me go down to my weekly. Price traded all the way from the high and then it came down to this low. So price has really moved. It has really moved. Now, if we are going to consider this as a point of swing low and it's going to reverse, where can price likely reverse? Okay, where can price likely reverse? Now, let me bring my fib. Let me bring my fib for you to see. If I'm going to consider this high and going to consider this as my low. Okay, where can price probably reverse? Price can come all the way to the 25 level. It can come all the way to the 50 level. It can come all the way to the 75 level, or even above the 75, before it can continue the retracement downwards, or before it can continue the retracement downwards, or continue further upwards and break the structure right in here. These are the two scenarios. These are the possible two scenarios. So alternatively, what I'm saying is that price can either trade above this relative equal highs into the 25 level, sweep the buy side liquidity resting above these highs. So let me put my fib to, let me put so that you can see what I'm talking about. There are relative equal highs above these yes, above these two candles. See, there are buy side liquidity resting above it, which price can just go above it, take the buy side liquidity, go to the 25 level, and then retrace back. Or it can continue up higher to this level. Don't ever think that should price go above and go to this level would mean that there's a shift in structure. No. Why? Because we are on the monthly time frame seeing that all from this high all the way to this low is one major swing. So on the monthly, should price trade above this, we still won't regard it as a shift in market structure. Although you may see it on the weekly, but we won't still regard it as a shift in market structure for the monthly time frame, because on the monthly we are expecting to still go. We can go 50, 75, or even break the structure and change shift or change course. But then that is not what we are anticipating. Should it go and break it, then we know that our structure has shifted. So now we look for retracement and then a rally back up. But if it doesn't happen, we are expecting to see, first of all, a pool of liquidity. So don't draw big target for yourself. Now the easiest one, or the easiest target or pool on liquidity, draw on liquidity, should be this first target right in here. This relative equal highs. These relative equal highs. Beautifully represented here. These relative equal highs. Then how can you target these relative equal highs? Should it be a point of call? This is the weekly time frame. Bear in mind, this is the weekly time frame. This is the weekly time frame. Now, let me show you one other thing that I was trying to draw your attention to earlier. I was trying to say that, okay, apart from the fact that we have this, there is also a trend line phantom that is happening right inside of this chart. Okay, we have this high, we have this higher high, we have this higher high, we have this higher high. This is what we call trend line phantom, and these are all engineered liquidity. Okay, these are all engineered liquidity on the smaller time frame, knowing very well that we on the monthly time frame that hasn't shifted structure, okay, or that is seeking to form a low where we have to settle and form a high, and then we have engineer liquidity at a certain point. Obviously the liquidity point or the liquidity pool will attract price towards that direction. What does the market do? Market is always trading towards liquidity pools. Where there is more liquidity, where the market is more liquid, that is where price trades towards. Okay, let me get rid of all these lines so that you get what I'm saying clearly. All right. So now, how do we then identify whether, okay, from where we've gotten to, now we could see that, okay, price is actually going to go up higher to attack this relative equal highs in here, or this buy side liquidity. How do we then identify? Now we're on the weekly time frame. Let's go down to our daily time frame and see how best, if we are going to be able to identify anything of that sort going to happen on the market. Let's see if we are able to identify. So on the daily time frame, we could see clearly where the pool, the relative equal highs are. This high and then this high. Okay, this is where we can identify the pool of liquidity resting. Okay, now on the daily time frame, we could clearly see that, well, it is just same, it's painting the same picture we had on the weekly time frame, that we have the market is more like it has a more like a bearish structure. Okay, so if you are going to go by that and say that, well, on the daily time frame, you can still see that bearish structure in the long run. Where can market necessarily go? And beautifully, what you can actually see even on the daily time frame is that apart from that relative equal high that has been formed in here, is another lower objective, which is this other two or triple highs that are right, or sorry, this relative equal highs that are formed in here, two relative equal highs that have been formed right in here. Okay, so this is one simple objective that is also an objective that can be targeted. This is also an objective that can be targeted on the interim before the higher target is even reached. Market can even target that highs, this relative equal highs, and then afterwards may not continue to sweep the relative equal highs that we saw on the weekly, and can continue the reversal downwards. And it's as simple as that. Now, where do we see from the weekly time frame that we said, well, we've seen that price is gravitating towards this relative equal highs. On the daily, do we see any telltale sign that is also showing us that, well, price is actually gravitating towards that direction? And this is the daily. We can clearly see how the market traded from this low all the way to this high. Let me show you. From this low all the way to this high, and then we saw all this form of market doing all this consolidation right in here. Okay, all this form of area, we saw this kind of consolidation right inside this area. You may not clearly see it, but it is in a way a form of consolidation. You could see how price gyrated between these areas. Okay, and then what do we see next? We see price dip below these consolidations, dips below this consolidation, and then you see how price quickly rallied up higher the previous day with this bullish candle. So now price trades below this consolidation, and what happens? You see how price gyrate or price rallies up higher with this previous day's bullish candle. What does this tell you, or what picture do you get from this chart? I want you to analyze. Just take some seconds and analyze it. Then I'll break it down for you. So beautifully, the buy side liquidity has been taken. The buy side liquidity of this consolidation has been taken. And then what are we expecting to see next? If the buy side has been taken, there is a very close objective right here, and the probability is price can easily attack this relative equal highs on the daily time frame, and it's as beautiful as this. Now, have you seen this bearish candle and this bullish candle that dipped below this consolidation? Now let's go, this is the daily time frame. Let's go down to our 1 hour time frame. I want to show you how beautifully, when price got to this level, okay, what price did and what was the signature that, okay, price actually reversed and it is trading towards the bullish direction. Let me give you the telltale signs. So beautifully, we had price trading inside this area. So we have a swing from this high all the way to this low. Okay, this is the low that price traded into and gave us a major low, and then it came to form this high here. It means that we have another swing, then to this low. So after this low, what happened? We had a market trading all the way to this high. Now watch this. Let me borrow this line and bring it down in here. You could see that when price traded here, it didn't close above this high. It means that this is not the major swing. This is not the swing. Then price retraces back, and then what does it do? It continues to rally up right here, right higher in here. It means that this is the major swing. And after the major swing, what happens? Now we look for anytime there's a reversal at the right point, and the reversal at the right point here represents a reversal on the daily time frame, or a reversal that has happened after price has taken the buy side liquidity resting in here. So a price taking a buy side liquidity is a reversal at the right point. In a situation where we're anticipating that the market is going to go to sweep the buy side liquidity resting in here, it's a reversal at the right point. Then what does the market do on the 1 hour time frame? Let's go back. It breaks the structure right in here. Okay, it breaks the structure right in here. After market has broken the structure, what do we look for? We look for retracement. Retracement into where? Retracement into an imbalance. Retracement into a fair value gap. Retracement into an order block. Retracement into a breaker. Okay, so beautifully you could see how price retraced into this fair value gap. Let me draw that for you to see. Where is the fair value gap? It's beautifully shown here. Look inside this swing that broke the structure. Where is the most clearest or the most easy to spot fair value gap? And it's here. Now, to even be more assured of what you are dealing with, you realize that price retraced into the fair value gap, which is close to 50% of the swing, which means that price has rather dipped a little into discount prices, to seek for more premium prices. And clearly this is what happens. Price dips into the discount price right inside the fair value gap right in here, and then price began to rally up higher. So this is where you could have caught a trade, taking your trade right inside this fair value gap, and then you ride all the way into the skies. And what is the main draw on liquidity here? The closest objective is this high in here that we indicated. Now let's go back to our daily time frame and continue our analysis from there. Price has dipped into the sell side liquidity resting in here, and then we rally price higher. Now on the 1 hour time frame, we see how the reversal takes place, and then a breaking structure takes place. Price retraces into a fair value gap at a certain time of the day, and then we see how price rallies up all the way into this area. Now beautifully, what are we still seeing on the chart? On the 1 hour time frame, we have price consolidating. We have price consolidating in here. And what have we seen? As price was consolidating, there was a fair value gap. There's a fair value gap that price had to it's a fair value gap that price had to come and dip into. Look at this fair value gap, and price dipped slightly into this fair value gap right in here. Okay, so this fair value gap starts from here all the way to the side, and price dips into it slightly, and you could see how price is rallying above, and price is trading higher. What are the chances? The chances are that should price retrace back into this fair value gap, no problem. The only point where we wouldn't want to see price trading below is below this low in here. Let me zoom out for you to see. Below this low in here, we want to see price traded below this. These are all engineered liquidity. Price can retrace. Let me show you. Price can retrace all the way into this area. But one area we wouldn't want to see price retrace back into is below this low. Why? Because this is a major swing. That gave rise to these consolidations. Okay, this is a major swing that is giving rise to these consolidations. So we wouldn't want to see price go above that or below this area. Now, should price trade above this consolidation, then we know that the sell side liquidity has been taken, as well as the buy side liquidity too has been taken. Then we know that this dealing range or this consolidation has been dealt with. Then we know that we are ultimately seeking for higher prices. Then what becomes our low and what becomes our high? Then our low becomes this, and our swing high becomes either of this, whichever is higher. So now if you pull your vertical lines, which is higher, you could see clearly that this high in here is higher. And should price not trade below this low, then in the consolidation we have this as our low. Although there was this form of consolidation and confusion surrounding the chart, but then this becomes our low, and then it continues from there. So beautifully, that is what is transpiring on the market. So should price trade above this line? Should price trade above this high? Should price trade above it? If it trades above this high in here, then we want to use this small swing 50% of it. So for instance, if the price trades, so for instance, if price trades and comes to form another high, let's say right in here, okay, so from this low, um let's say this is the low, okay, so let me use the fib 2 rather. So this is the low and it forms another high right in here, okay. If it forms another high right in here, now our ideal situation would be that price should retrace into 50% and then continue back higher, continue up higher. Okay, so now you wait for a swing to be formed after it breaks this structure, and then you want to wait for the retracement and then enjoy the ride into the sky. Ultimately, this is not the low because this candle as we speak hasn't even yet closed, and another one hasn't even formed after this candle to see for us, confirm for us that okay, this becomes a low. And nevertheless, we are still in the consolidation. We haven't come outside of the consolidation. If we trade above it, then we are certain that okay, this high, a new high has been formed. Then this regarded as a low. I hope it makes sense. So this is the little that is happening on volatility. This is a live chart analysis that I'm showing you. This is the little that is happening on volatility 75. This is what is happening on volatility 75 currently as we speak. Now let me give you another easy cozy bread and butter setup. Now let's go down to, this is the 1 hour time frame. Let's go down to a 15 minutes. Oh no, I'd rather choose 5 minute time frame. Let's go down to a 5 minutes time frame. Okay, now beautifully, this is the 5 minute time frame. Do we have a market structure shift on this 5 minute time frame, considering price action that is happening right in here? Do we have a market structure shift? So from this high all the way to this low, it forms another high in here, and then it breaks below to form this low, to form this high. It breaks below to form this low, and then price rallies all the way up here. It has broken this high. Do we have a market structure shift? Yes, we have a structure shift on the 5 minute time frame happening right in here. Okay, now what are we expecting? We are expecting a retracement into where? Into 50% of this market. If it forms a high, we expect it to have to trade into 50% of this market. Anywhere 50 or below, we can take a trade. Put your stop below this low and then you are good to go. Why are we considering this? Because price has swept a recent low. Okay, price has taken the buy sell side liquidity resting below all this accumulation. Price has taken the sell side liquidity resting below it. I hope it makes sense. I hope it does make sense, even on the smaller time frame. So in the short term objective, this is the little analysis I have for you today. I wish you all the best in your trading. I didn't want today's video to be long. It was just an analysis on what's transpiring on the market. I'll give you update on what is going to happen and all that. So stay tuned. If you are new to this channel, please subscribe, like the videos, and be part of this big family. I wish you all the best in your trading. Enjoy the rest of the evening. See you in the next video.